What's up, guys? Hope you guys can hear me out there. What's going on? We are back with another live stream. Put this up a little bit. There we go. You guys like that light? Back with another live stream today. Today is November 3rd. Welcome, guys. Just want to look at some stock market performance today, guys. See what's moving, what's not moving. Got some interesting stocks I want to talk to you guys about today, man. I bought into CHEGG last night or yesterday, up 6.5% today. Great win there. Just want to talk to you guys about some market things. Got the Wall Street Journal pulled up here. Still not able to share my screen just yet, but we're gonna figure that out. But let's dive into it, man. Let's see what's going on. Some things I want to talk to you guys about. Let's see if there's anything interesting happening in the market. Hope everyone's having a good morning. It is 9:58 a.m. About to be 10 a.m. here. About an hour and a half out from the Fed's releasing the notes on its meeting. Is the Fed going to raise rates? Are they going to stop tapering? A lot of good stuff to talk about, guys. Let's see what we got here. Guys, I really hope you guys like these live streams, man. I really enjoy talking about these things. And I hope you guys enjoy the live streams. Let's look at the market performance. Right now at 10 a.m., November 3rd, the Dow is down 111 points. NASDAQ is up 16 points. S&P is down 5 points. So relatively flat day today, guys. Relatively flat day. Let's see what's going on, man. Let's see what's going on. So we got the Fed. The Federal Reserve likely to announce it will begin steadily reducing its bond buying program. Let's talk a little bit about that. I know that's big news today. And honestly, guys, as a lot of you guys already know, anytime the Fed is releasing information or, releasing their outlook or whether or not they're going to raise rates or not, it has a huge impact on the overall market performance. It really has the ability to drive stocks up or drive stocks down, depending on the information that was released. Today there's expectations that the Fed is going to, talk a little bit about, cutting back their tapering. Right now, the Fed is buying roughly $120 billion in treasury bonds and mortgage-backed securities a month. Once again, that's $120 billion a month, guys. And they're talking about, curbing that and eventually, not buying as many federal bonds or treasury bonds and mortgage-backed securities, and really just deleveraging their balance sheet. So that's something that we got coming up here. I'm going to crack into this Wall Street Journal article that I read this morning about the Fed and its tapering. It's a big deal, guys, because, once again, the Fed has an ability to prop up the markets. The Fed has an ability to increase equity valuations. The Fed has the ability to drive down interest rates on treasury bonds, right? Just from buying and selling. So it's important that, we stay on top of these things as elite millennials. We're aware of what the Fed stance is. Are they dovish? Are they hawkish? Are they looking to raise rates or are they looking to take rates down? So I want to rip through this Wall Street Journal article. The Federal Reserve is likely to announce Wednesday that it will begin steadily reducing its bond buying program, the biggest step the central bank has taken toward reversing its pandemic-era stimulus. The decision to wind down or taper those purchases this month has been so heavily telegraphed by Fed officials that the focus of the two-day meeting that ends Wednesday has shifted towards how they will characterize inflation risk, which carries important implications on how soon they might raise interest rates. So let's give some backstory on interest rates, right? Back early on in the pandemic, right? The advent of COVID-19, the advent of the pandemic, in order to prop up the economy and keep things rolling, the Fed cut rates to zero, right? And they were still relatively low at that time, but They weren't zero. The Fed cut rates to zero. And ultimately what that does is it stimulates spending in the economy. It stimulates growth in the economy, because when the Fed benchmarks rates and rates are zero, that drives credit card rates down. That drives mortgage rates down, right? And if people are paying less on their mortgage or less on, you know, their private loans, they have more discretionary income in their pocket. They have more spending capability. And what do? They save that money. They invest that money. They go out and spend it on businesses, right? So really the Fed tinkering with the interest rate is really tinkering with the amount of discretionary income we all have in our pockets, and thus how much we're spending and how much we're investing that cash. So anytime the Fed cuts rates, it's literally to stimulate the economy. And on the opposite side of that, I'm turning this down a little bit. On the opposite side of that, guys, when the Fed raises rates, it's meant to stunt growth or stunt inflation, right? Because if rates are low, people are spending, they're driving the cost of goods up. They're driving the cost of goods and services up, which is inflation, right? And as inflation increases, it can become more and more dangerous, right? So in order to counterbalance that, the Fed will raise rates to reduce the amount of spending that we're seeing. So that's why it's important, guys, that we stay on top of these things. You know, we're aware of, you know, what direction the Fed is leaning in regards to interest rates. But let me continue with this article, okay? So the Fed will release its post-meeting policy statement at 2 p.m. Eastern Standard Time. That's 11 here, West Coast. I'm here in San Diego. Fed Chairman Jerome Powell will follow with a press conference at 2:30. Tune into that, guys. Tune into that 2:30 conference. It's, you know, that there's some good stuff to watch. I like to watch those kind of things just so I can be on top of the media, be on top of the news, and be able to pick my securities and pick my stocks out according to that information. So stay on top of that. Initiating taper. So continuing on, minutes from the Fed's September 21st, 22nd meeting signaled that the central bank would begin around the middle of November to reduce its asset buying by $15 billion a month. Like I said, right now the Fed's buying roughly $120 billion a month in treasuries and mortgage-backed securities. That would end the expansion of the Fed's $8.6 trillion asset portfolio by June. The Fed cut its short-term benchmark rate to near zero when the coronavirus pandemic hit in the U.S. economy in March 2020, and it has been buying $120 billion a month in treasury and mortgage securities initially to stabilize financial markets. So I really think the big concern with the Fed is, you know, it was a big conversation. I made previous videos about this. You know, it was back when the Fed cut rates back in March of 2020 with the advent of the pandemic. You know, they spoke about, you know, well, sorry, let's fast forward, right? As the economy began to open back up, and you know, cities and states got off lockdown, uh, inflation started to pick up, right? And I made previous videos about this. Inflation started to pick up, and you know, the Fed basically coined this inflation as transitory, right? That was a big popular word that was thrown around, is this is transitory inflation, temporary inflation. And for the last, you know, 10 years, the United States has struggled to maintain and generate gross domestic product over 2%, right? And now GDP is well above 2%, right? But the Fed saying this is transitory, right? Inflation, this inflationary period is transitory. It's not going to be here forever. So we're not going to hike up interest rates until we keep inflation above our 2% target for at least a few months, right? So, but the worry comes in is that now investors and people are worried that, what if this inflation that we're seeing is not transitory? What if it's here to stay? And if it is here to stay, how is that going to affect asset prices? How is that going to affect the economy? And if it is here to stay, should the Fed be raising rates sooner, right? Should the Fed be raising rates sooner? If it's here to stay, what risk are we running by not tapering and raising rates now, thinking that this inflationary period that we're seeing is only temporary, right? So that's a big question that is kind of, that's going around here in the market. It's causing a lot of uncertainty. So we'll see when the Fed releases its statement today, kind of what their viewpoint is on it. But outside that article, let's look into some stock performance. I want to see what the movers are today. I told you guys I bought CHEGG yesterday. Let's talk about CHEGG. Actually, I really didn't have an opportunity to break into that yesterday. Let me see. Let me go to my portfolio here. Like I said, guys, I'm very new to this live thing. So yeah. But I'm up 2.5% today. I hope you guys' portfolios are doing well. I want to dig into CHEGG. So from what I know about CHEGG, right? CHEGG was down a lot yesterday. I mean, like the stock had fallen like $30 yesterday, from around, I believe, the $68 range. And the reason I bought into it is to be honest with you, I lean contrarian pretty often. So when I see people doing, you know, overselling or overbuying, I tend to do the opposite because I know that it's very easy for things to get overbought, and it's very easy for things to get oversold. For those of you technical traders out there, you technical investors out there, there's things such as Bollinger Bands, right? If you're familiar with Bollinger Bands basically outline trends, intraday trends of certain securities. And if it pops above that Bollinger Band, that top Bollinger Band, that means something's potentially being overbought. If it falls below that bottom Bollinger Band, that means it's being oversold. So I didn't even look at the CHEGG Bollinger Band yesterday, but I kind of just knew that it was oversold, just considering a huge price drop. So I bought it. I bought CHEGG, and it was funny. So I'm looking at a few news articles here on CHEGG, and yesterday there were a number of different financial institutions that came out and basically downgraded CHEGG, right? But as I digged into these downgrades a little bit more, so some things stuck out to me. I'm going to see if I can pull this up more. Let's see. And I dug into these downgrades a little bit. Some things stuck out today. So give me right. So just reading the first few articles that CHEGG. Northland Capital downgrades CHEGG to market perform from outperform. And I just seen this one yesterday. Adjust price target to $54 a share from $100 a share. So right now, CHEGG is trading at $34 a share. This company, Northland Capital, that I'm not downgrade CHEGG, the price target for CHEGG upside here. There's still $20 upside with CHEGG, right? And I just seen this article this morning, but there were a number of companies yesterday that came out and downgraded CHEGG. There's from overweight to neutral. So these companies aren't bearish on CHEGG. They're not bearish. Moving from overweight to neutral is fine. Neutral is fine. Look, BMO Capital adjusts CHEGG's price target to $49 from $74, maintains market perform rating. So they still have maintained a market perform rating with CHEGG. The price target is still $49 a share. That's still, once again, close to a $20 differential from where it's trading at now. That's why I bought CHEGG yesterday. And I'm up 2.5% on CHEGG right now. I'm not saying go in and buy it now, but these are just some things that I was looking at. There were a number of companies that came out. CHEGG downgraded by Morgan Stanley to equal weight, right? Equal weight. It's not bearish on CHEGG. It's just equal weight. Citigroup down neutral from buy, right? So at first it was a buy rating. Now they're neutral on it. The price target is still $50, right? So CHEGG had a huge sell-off yesterday. It was down $30. I saw that as a buying opportunity. It was oversold. It was a no-brainer to buy that. I'm up 2.5% on it today. I looked at the news and I'm like, okay, all these firms have downgraded CHEGG, but they still have a bullish outlook on the stock. The price target of CHEGG is still high. Look, there's another firm right here. Barrington adjusts price target on CHEGG to $60 from $100, right? So $60, that's still way above what it's trading at today, guys. So I think there's a good opportunity in CHEGG. Like I said, I bought it yesterday. The stock is up, 2.5% today. I'm really happy with that. I'm probably going to hold it for, probably until it bounces back up around that $60 mark, which I will. So CHEGG was a big one yesterday that I bought. Let's look at what else, man. There's a lot of movers today. I want to look at the movers today. Some of the movers here. Once again, guys, it's earnings season. So like I said yesterday in my video, earnings season is a great way to make cash, guys. Like I said, get a list of 10 to 15 stocks that are releasing earnings. Do a good amount of due diligence on it. Make sure that what I like to do is I like to look at, okay, how did the stock perform its last earnings release? Did it beat earnings last quarter? If so, what's the likelihood that it's going to beat earnings this quarter? And typically, if a company beats earnings, you're going to see some bullish behavior in that stock, right? So it's a great short-term strategy to make some short-term cash during earnings season, guys. Let's see. I'm trying to find some movers here, but I just want to see. I wonder how Activision did. I know Activision released earnings. Activision released earnings yesterday. Like I said, I almost bought Activision. I'm a fan of the company, but I know they've been going through a lot of recent negative PR stuff, which can, be a little resistance on a company, especially even if it releases good earnings. You're going to see resistance there. So let's see. So today's November 3rd. Let's see if we have any reputable companies coming out with earnings today. Maybe I can give you guys some ideas. Alibaba. Okay. We all know who Alibaba is. Alibaba is releasing earnings today after, I think they didn't specify whether it was after market close or before market close. Alibaba is a relatively inexpensive stock as well. It trades at $165 a share, guys. These are stocks that are affordable, right? You don't have to be a multimillionaire to invest in financial markets. I tell people this all the time, and it's such a huge misconception, right? That you have to be a multimillionaire, you have to have $1 million in the bank to invest. I was teaching guys how to invest, last year, and a lot of friends, they were like, well, how do you invest? I'm like, okay, you download Robinhood, you download I don't know, Active Trader with Fidelity, you download Thinkorswim or a TD Ameritrade account, and you buy a stock. Don't buy a penny stock unless you think it's, unless you've done your due diligence. They're risky, but you don't need millions of dollars to invest, guys. Alibaba Group, like right here, like I said, they released earnings today. They didn't specify whether it was after market close or before. If it was before, I guess we would have the earnings now. So Alibaba to release earnings today, $165 stock. The stock is up $2.51 today at 1.54%. We're seeing some bullish activity with Alibaba. And I know they've been going through a lot in China. I think I vaguely remember reading some things about Alibaba in China not too long ago. So Alibaba, guys, look into it. I'm not sure whether they're going to beat or not. It looks like the past 1, 2, 3, 4, 5, 6, 7 quarters, Alibaba has beat. Well, they didn't beat in Q4 of last year. Sorry. These are actually Q2. Their fiscal year is a little bit different. So they didn't beat in Q4 of last year, but they beat every quarter before that. So, good stuff. So check out Alibaba to release earnings tonight or after market close, I'm assuming, or during market. We'll see. Let's look at some other ones that I can give you guys. I'm going to try to keep this stream short. Once again, when I'm looking for earnings, I'm looking for companies that I know, companies that are well-known companies, right? That's what I'm looking for. Let's see. Because there's a bunch of companies like BioLife Solutions. I think I'm familiar with them. Let's see. BlackRock Capital Investment Corp. Okay. So it looks like BlackRock to release earnings today. Check out BlackRock. Brookfield Infrastructure Partners. You want to know what's crazy story? So my last apartment complex actually was owned by Brookfield, guys. And prior to so they actually bought Brookfield. They actually bought my apartment complex during my lease. So we had a change of staff, change of management, change of everything. And I look into this Brookfield company, and they're like a multi-billion dollar, if not trillion dollar AUM private equity company. I think $1 trillion private equity company. Look into Brookfield Property Management. Huge company, guys. And you guys know I really enjoy private equity hedge fund kind of things. Hopefully I can build my own firm one day. That's a goal of mine. But let's look at some other holdings here. I'm going to cut this stream short too, guys. Clovis Oncology. I'm familiar with Clovis. Looks like they released earnings already, and it looks like they did not beat earnings, and the stock is down 32 cents. Clovis is a cheap stock, $4.43. I think I remember Clovis, ticker symbol CLVS. I remember Clovis from I think I day traded Clovis a few times before. That's why it sounds familiar to me. Cheap stock. Let's see. Let me see if I can give you guys a couple more before we get out of here. Discovery Inc. I think that's a credit card company. They reported today. Let's see. Encore Capital Group, Equitable Holdings, Energy Inc., 5 Point Holdings. Not too sure what these guys are. For a big name. Looking for big names that we can spot a mile away. MGM, what is that? MGM Resorts International set to report earnings today. We all know about MGM. That's a $48 stock, guys. MGM's a $48 stock. It's up 36 cents today. It's a $48 stock. $48 stock. Looks like they've been operating at a loss, at least from an earnings perspective. The past few quarters, it's slowly been going down. It looks like they got hit pretty hard by the pandemic, as most hospitality. I think MGM is hospitality, or is that it's a resort, MGM Resorts, right? So I don't know, guys. You could see some positive. I'm going to add MGM to the watch list, because as the economy opens back up, these resorts are going to start to regain some revenue, regain some profitability. So it's definitely something to look at. I'm going to put them in my watch list. I think I put Airbnb in my watch list yesterday. I don't know how Airbnb is doing today. Oh no, let's see. I'm still figuring out. So I do a lot of trading on Fidelity right now. Secret for all you guys, I actually work with Fidelity right now. So I actually work with Fidelity, so I do a lot of my trading on Fidelity. LYFT is up $3 today, guys. LYFT is up 7% today, guys. I know they were set to release earnings. I don't know if they released earnings. I think they were set to release earnings this week. I just didn't trust it. I don't trust rideshare right now. I don't know, like, obviously with the pandemic and all that stuff, like, who wants, like, no one's really taking Ubers right now. I mean, I took one this weekend, but LYFT is up 7.6% today, guys. I wonder if they release earnings. Another reason I didn't like LYFT is I looked at their chart, and for the past 6 months, it's kind of been trending down, which means a lot of resistance to the upside. So unless something spectacular happens. Okay, so it looks like LYFT did release earnings this week. It may have been yesterday. LYFT released earnings. They beat earnings estimates. EPS 5 cents per share versus estimated EPS. Let me see if I can get this pop up. It was estimated EPS. So LYFT reported yesterday, I'm guessing after market close, they beat earnings estimates of -3 cents. They actually had a positive 5 cents for earnings per share. So they beat estimates yesterday. That explains why the stock is up $3. That explains it. And we're seeing some good behavior right now in the price. $48 a share, guys. Look into LYFT potentially. Big jump off a big beat. And this just proves my point, guys. During earnings season, there's a lot of money to be made, right? So don't sleep on it. But I'm gonna end the video here, guys. Maybe I'll come back and do a live later today. A lot of work to do. I got a video coming up that I'm still working on editing right now, about the top up and coming industries that I think as elite millennials we should be starting businesses in. I think it's going to be an awesome video talking about a couple sectors that are favorites of mine that I think it's a great opportunity to start businesses in and make some great things happen. So stay tuned for that. It should be coming this week. But let's go, guys. Happy hunting earnings season. Once again, get your 10 to 15 stocks set to release earnings within the next couple of weeks. Make some plays, make some money. Your boy, Ra Ray. I'm taking off. Peace.